Jamie Dimon is the boss of a really big bank called JP Morgan Chase. He and other money experts are going to tell you what they think will happen to America's money situation in the next few months. They'll talk about whether banks will lower their interest rates. I also have tons of new information about how America's economy is doing, and I watch this stuff all the time that I talk about this a lot in my live videos. But here's all that research and information. After you watch this video, you'll really understand where our economy is right now and where it's heading. Let's start. I think our economy is getting weaker. Whether that means we're heading to a recession or just slowing down, I don't know. And that just proves what we already thought. And I know that's a big change in thinking. Speaking of the economy's condition and how hard it is to predict, one question people have is what's happening with shoppers right now. They're still buying stuff. It's a little different depending on how much money they make. They still have jobs. So shoppers usually react to that. So when shoppers get weaker, spending gets weaker, but company profits are still up, and there are lots of different things happening in the economy right now. It's hard to figure out what it all means, and I've always doubted most predictions for that reason we just have to wait and see. There's a lot of government money help out there too. We don't know what the Federal Reserve Bank will do. They'll probably lower rates, but I don't think that will fix the economy. So we'll see. They're going to cut rates next week. Yeah, they're going to cut. I think they should cut by 50 points, or they're going to cut by 25 points probably. It will depend. The price report that comes out tomorrow or Thursday will be interesting. Listen, I think they should go with 50, but I think they're going to go with 25, and then we're going to start bringing rates down. That being said, you can still build an investment mix to get this kind of return. And by the way, you can still stay in the front part of the interest rate curve and get that return that we've been stretching a little bit out, because now your real rates are pretty exciting. Get the things that have interesting real rates. Now, if inflation is running around 3%, these real rates are actually okay along the curve. Now, your colleague, former colleague Jamie Dimon says the economy is getting weaker. Do you believe the economy is getting weaker? First of all, I think it's complicated, and I think short quotes are really hard to understand without context. And I split it into two groups. Number one is what we see in our own information. The second is what you see more broadly. In our own information, things are really stable. We look at, I know you guys have talked about it this morning, and other times people's spending continues at the same yearly pace. Across almost all wealth levels, people's credit is as good as it's been in the last 6 months. In fact, it's probably getting a little better. Companies are in really great shape. That we look for signs for any kind of change, and you just don't see it. Having said that, there is this big difference between higher income and lower income shoppers, which continues and is a real problem. And when you look at just the overall information about jobs, it's undeniable in terms of just job creation. So yeah, things actually feel very good today, certainly compared to what you think they could be, but it's not equal across wealth levels. And there's probably more bad stuff than good stuff coming. So the high-end, low-end shopper spending, you see it. All right, let's just move on because I know that clip was a little choppy there. I'm sorry about that. The website X was having some technical problems. So I also wanted to show you this here real quick. In my mind, one of the single most important money questions of the next few years. This is the Treasurer of the United States, Scott Bent, kind of telling you where he sees this going. This was back a month or two ago, but just gives you some extra background and where I'm taking this video and what I'm about to show you. Will there be a continued separation between the world's two biggest economies, or is it possible to rebalance together? President Trump would like the U.S. economy to rebalance toward making more things, bring down the trade gap. The Chinese continue to add manufacturing ability. Currently, they are 30% of global ability, up a lot since 2020 under the cover of COVID. They increased ability. They are in the middle of a really big real estate downturn. Some would call it crisis. They have very low shopper spending, and so they need to rebalance, do more shopper spending, fix their domestic imbalances, but they cannot do that on the backs of the rest of the world. So if they are willing to be good partners and approach a negotiation where the U.S. brings back manufacturing, precise manufacturing, high-paying jobs, and the Chinese are willing to open their economy to American products, then we could do that together. Okay, So this whole tariffs and trade war thing is designed to bring back manufacturing jobs to the United States, right? High-paying manufacturing jobs. So let's look at the overall information and the health of the economy. And I actually want to show you some stuff about manufacturing and kind of what that represents in the total job market here in the United States. And if it kind of makes sense to do what we're doing right now. So here is the U.S. economy overview. Economic momentum has slowed down a lot in 2025 because of things like higher tariffs, tighter money policy, and global trade tensions. Real GDP bounced back by 3.3% yearly in quarter two after shrinking by 0.05 negative in the first quarter, but overall growth of the first half of the year was only 1.4%, about half of the 2.8% seen in 2024. Predictions expect less than 1% growth for quarter three and small improvement in quarter four as government stimulus measures, the One Big Beautiful Bill Act, begin to work actively. Tariff money right now, tariff collections in 2025 is $183.6 billion, with a record $31.4 billion collected in August alone. Who pays the tariff? U.S. importers. U.S. businesses pay the tariffs directly. Most studies show that over half of the tariff burden falls on U.S. companies. I actually found a new study, 86% of tariffs are paid by U.S. companies and U.S. shoppers. Recent estimates in 2025, U.S. businesses absorb slightly more than half of the tariff costs, and the shopper share price rise above 67% in the coming months. It's actually much higher. Impact on farmers and businesses. Farmers and U.S. agriculture exports to China dropped 39% year over year, with projected export losses for soybeans exceeding 25 million metric tons and corn exports to China down by as much as 90%. Actually, right now, soybeans and corn last year, we did about $12 to $14 billion to China. This year, nothing. That is a big hit for rural farmers in the middle of the country. The farm trade gap reached $28.6 billion in the first half of 2025. Unemployment rate is 4.3%. That is rising in August 2025, the highest since October 2021. Jobs created in August is only 22,000, far below expectations. Annual revision. The U.S. economy added 911,000 fewer jobs from April 2024 to March 2025. Actually, this is interesting because when Biden was leaving office, I had said several times in my live streams that the economy was already slowing down under Biden. And when Trump came in to try to rebalance manufacturing in the United States, the policies that he put in place have actually slowed down job creation. What's speeding up job loss here is also AI. I don't think people realize that 20 to 25% of all jobs right now will be replaced by AI, artificial intelligence, or robots over the next few years. So, if you have a job right now that you think AI can replace you, you might want to be learning how to use AI so your skills can beat the people that you're working with, like people that you're working next to. Because if they look at you and your friend here, and you guys have the same resume, but you have AI skills, they'll probably keep you and pay you more. And unfortunately, the problem also here is when you have $186 billion paid by U.S. businesses here. You know, a lot of this is paid by U.S. shoppers and businesses. These businesses are looking around for how to save money, right? Because now they don't have an extra $180 billion that they used to have. So, what is the easiest and best way to start saving money? Well, getting rid of some employees and start adding AI anywhere they can is going to save them a lot of money in the overall expectation of things. And so, I think all of this is going to catch up to us very soon. And unfortunately, this is going to have a lot of bad consequences, in my opinion, going forward. Current inflation rate is about 2.9% in August. Higher prices for food, used cars, and trucks, and a bump in energy costs have contributed to shelter costs rising 0.04 monthly. Core inflation remains steady at 3.1%. Short term, the Federal Reserve is widely expected to cut rates by 0.25%. And there's 3 meetings left: September, October, and December. I also wanted to show you some stuff about manufacturing because this whole thing has been about bringing manufacturing back to the United States. But manufacturing only represents 10% of jobs in the United States. So we're doing a lot of this just to bump up a few points here on the 10, maybe 10, 15%. I think this is a very dangerous path to walk. Manufacturing represents 10% of U.S. GDP in 2025, with annual output valued at about $2.9 trillion, with about 13 million workers employed in the sector. Rebuilding and expanding U.S. manufacturing at a large scale would take and require at least a decade of coordinated technology upgrades. Workforce growth and supply chain transformation and current supply chain network faces big obstacles in supporting rapid reshoring. Manufacturing, like I said, makes up 10%. Sector employment is nearly 13 million jobs, with some of these manufacturing workers earning $100,000